present this document. Okay, so before getting to start today's session, what we have discussed until yesterday. So let us quick recap once again. So we have done the configuration successfully. I'm just making the summary altogether until yesterday what we have done. We did successfully configured accounts payable, accounts receivable, and also GL accounting, basic configuration of the FI and CO. In addition to that, even we have done the configuration for the BAM, bank account management, and also we have seen about what are the changes between ECC and S4 HANA. Then coming to that, and also we have done successfully configuration for automatic payment program. In that, there are new changes in S4 HANA. Those changes also we have seen. So why SAP has come up with those options, we have seen successfully, and also we did successfully configured EBS electronic bank statement for accounts payable and accounts receivable. Yes, we did successfully processed the files and the EBS files prepared by manually and cleared customer line items and posted the vendor line items as per the accounting flow, which I have explained in detail step by step. Now coming to that, yesterday, yeah, Maruti, I think you have some question.
Yeah.
Yes, please.
Yeah, Vijay. Vijay, regarding BAM, do we still have anything to be discussed as part of cash management or in TRM, or it is all done?
No, no, no. Still BAM. Yes, there are few things yet to be discussed because full scope, right? The full scope of cash
Mhm.
management as well as basic scope of cash management that yet to be discussed as part of the cash and liquidity management. Okay, for your
Okay.
kind information.
Okay. Okay, Vijay. Thank you. That's it.
Thank you. Now, coming to that, since until yesterday, we have processed successfully what are the prerequisites which we have expected to be start for cash management, cash and liquidity management. We have successfully completed those required configuration steps. Yesterday, we just started overview of the cash management and why the cash management is required. We have already seen that one. We have gone through the first slide of this PPT. So what is the objective of the cash management? If you could see here, the first slide yesterday we have already gone through here. What is the objective of the cash position? It is going to illustrates short-term trends of the bank account. And also now the major thing here is that we must have to understand the process, how the planning can be done in the cash management. So now from the bottom, we should not think about the top level. Basically, we must have to think from the bottom. As we know, if you could have experienced cash management and liquidity management, you know, right? The planning groups you can create and you can associate those planning groups in the customer master data or vendor master data. Yes, those information will be populated in the liquidity management. The similar way, we have the planning types. Planning types also which are available. Those planning types you can also define and you can also get the information, and based on that you can do the planning. There are various planning types are there, planning levels are there, planning groups are there. Let us discuss all those things in detail once we will be there during the during the configuration. Now first let us understand here, the question is that why cash management? The question is that here, if you ask me that what is the cash management and why it is required, many people might ask this question during the interview point of view. Please kindly take note. Very, very important one. Second. Yes, see the question the sorry, it is not mode. Second. Yes. So the question is that why the cash management is required. Okay. See now, there are two types. First thing is that bank statements. Before getting to that, the cash management, which is going to explain about the short-term cash visibility. Let us assume a organization. Let me give one of the practical example, which we can, 1 second. Let us take one example so that it is easy for us to understand it in a process flow. First, let me explain about the high level of the organization. I mean, the high level of the cash position, how the cash position which is going to. Okay, so now what is going to happen here? Today is the 11th of August, 2026. Then the management has been decided. Okay, so now let's say now today the cash position, let us understand the 11th of August, the cash position as follows, the cash position. So now opening bank balance, let us take here opening bank balance. Let us understand here 10 lakhs rupees is the opening cash balance. Now customers received, now incoming payment. Incoming payments which we have expected by today. We are not sure about only opening balance which is lying in our bank account. But incoming payments, right? Incoming payments, let me understand here. Sorry. 3 lakhs. Yes. Now, let's say vendor payments. Vendor or supplier payments. Let us assume here this could be I'm just taking the random figures, okay, for better understanding. Could be a 4 lakhs. Now, payroll, let us assume here is a salaries. Salaries payment. Then bank charges. Let us assume bank charges. You can also think anything. 10,000. I'm just taking the random figure. Now, what is the expected closing balance here? So, if I can summarize here all together, now you could see here, this is the summary here. Okay, let me take here. So now expected closing cash. This could be the expected closing cash. This one could be. Now, how are we going to do this forecasting analysis? Yes, the opening balance and the closing balance, we do understand we can directly go and get the balance from the bank account. So that is true. But second thing is that incoming payments and also vendor payments, salaries payments, bank charges, all this information, how we can get those information into one place. Yes, there is an option in SAP. What we can do, you can go and get the information from the bank accounts. You can keep it aside. Then again, go to your vendor and customer aging report. You can get that information and keep it into the somewhere. Again, you can go to the salaries payable information, get the information, keep it aside in one Excel. Then bank charges. Finally, you can consolidate all together. Then you will get the final report. That we do agree completely. But the problem here is that again, manual intervention to be required. How much time does it take in order to perform all these activities step by step? Management expectation is that we do not want to do all these activities one by one. Again, if something goes wrong, manual mistake, again that completely that will mess up. So that is the reason all together balances to be populate in one place or all balances to be appear in one place to plan for future point of view. So that is the reason the cash management is going to important for us. So now Let me go back to that again, that PPT here. Now you could see here, basic planning data. If you want to do the planning, either the planning could be for tomorrow, or could be next month, or could be next year, based on the historical data, based on future incomings, based on outgoings, or based on liquidity funds which we are having. Based on that, yes, we can do the planning. If the organizations does not do the proper planning, the management, definitely the decisions making will be delayed, and also that will have an impact on the organization performance. Now, in order to go for the planning, see, now you could see process for day-to-day planning. This planning, it cannot be done today. Today, 11th of August, right? You cannot do the planning for today itself. Yes, you can do it, but majority of the organizations, what they does, the planning can be done for future. I'm sure about it. Either it could be tomorrow, or it could be upcoming week, or for a upcoming months. Because if you go immediately, there might be a to arrange the funds also. We may not have sufficient time to pool the funds. Again, we will be in a different situations. Let me give an example. If the planning can be done by today, so what is going to happen here? Let us understand here. I'm going to take the same example in other way around. Now you could see here what is going to happen. Opening balance. So this is opening balance. This is the incoming which you have expected. There is no planning here. So now let us understand here. Let me make the changes here for better understanding here. Now let's say, let me make this in this way. Now you could see what is happening here. If you are going to do the planning for that particular day, you could see clearly here expected cash flow by end of the day. It could be a deficit cash here. So meaning that where we do not have sufficient funds to fulfill our day-to-day needs. That is the reason the planning has come into picture. We must have to do the planning in advance for tomorrow's activities, for next week, for next month. So that is what I would recommend here. The planning can be done. If you could see here clearly, this planning for tomorrow, next day preparation. You could see here next day preparation, the planning which we are doing for upcoming, for future. Just keep in mind that one. Coming to that, what is the source data to do the planning? Bank statements, electronic bank statements, or else it could be a manual bank statements. So first thing is that if I wanted to do the planning, anyone, if you wanted to do the planning, we would like to know that what is the balance which is lying into our bank accounts. So how we will come to know that? Based on the bank statement, directly we can go and we can get the report. But still, right, from those bank accounts, there could be outgoing transactions, there could be incoming transactions which are happening. So we must have to consider them. Then based on that only, we can do the planning. So until yesterday, what we have done, the electronic bank statement, we did configuration successfully, but we did not do any configuration for cash management. Yes, there is a planning type which we must have to do the configuration. So for that, there are a number of steps to be configured, that we can see that one. So because by before getting to this one, okay, before processing the let's say now we have already initiated the payments to the vendors. But before processing those payments at bank end, we must have to do the planning. We must have to aware how much funds which are available into our bank account. Now, the basic planning data, the source is that you need to understand electronic bank statement and manual bank statement. But now EBS integration is a crucial part in the cash management. Coming to that manual planning, see, there are two types of plannings will be there. One is a where you can integrate, where you can automate the process by bank statements, because those bank EBS statement consist of your opening and closing balance. As soon as once they will get processed, we can get the report. Second thing is that manual planning. This is automatic. The planning can be done automation, no manual intervention to be required. Even in the classes also, we are going to discuss both manual and automation. Manual planning. Planning advises forecast values, sub accounts, example check deposits. So the manual planning where we can create memo records by manually, yes, we can able to do the planning ourselves without automation. There are few things you cannot automate. Those things, right? So let me give an example. Now we are in the month of August. In the month of September 30th, as part of GST payable, organization has to make GST payment to the government authorities. It's a huge amount. In that case, what we need to do directly until 30th of September, you no need to wait. At that point of time, maybe the funds could be available, could not be available. That is again different situation. So that is the reason. Let us do the planning now itself. Now, if you want to do the planning, then we would require accounting entries. As of now, there is no accounting entry which has been posted. But now the expected outcome, the cash outcome here is the outgoing cash would be a, let's say there is let's assume that 10 lakhs rupees. But how the planning can be done? Today itself, we can create one manual memo, the memo record by manually. Then the validity period we can give until first week of October or 30th of September. What it will happen, the keep on those amount, I mean, especially for the GST payments, the planning based on the planning level assignment or based on the planning type assignment, what system does, system is going to keep on repeating that line item into your planning during the planning. So that excess amount, the 10,000, right, it will be included until September end. So meaning that you need to do the planning or we need to arrange the funds. Now, this is the manual planning and the automation here. Yes, we are going to see both manual and automation. The second thing is that based on available sources, you need to take a decision, planning decision. Now, money market here. Okay, so before getting to that, right, this is one of the example where the incoming payments which are arriving from the treasury, in case if you would have done the investments, yes, the interests which are incoming, either it could be incoming, either it is outgoing. Based on the source data, we must have to do the planning. Money market, only one instrument. I took the example here, interest terms. It could be incoming or it might be outgoing also. I'm not saying that only one direction. Now, cash concentration. So what does it mean by the cash concentration? Again, why it is required? Let us assume here. So cash concentration is one of the, but there are two types of cash concentrations are there that we will discuss anyhow in the upcoming sessions. That we'll see that one. Now, So cash pool IDs we have to define. There are different types of cash concentrations are there. Header account. Okay, there is a parent and one main bank account will be become the again child account. Okay, there are different scenarios are there in the cash concentration. Let's say now I have the SBI bank account. Let us assume our organization has a more than hundreds of bank accounts. Now SBI, let us assume here the concept of cash concentration. SBI is having is, let's say now this is the top account. Top, okay, just understand this one. Top account or header account. So now this has the balance 1 lakh rupees, that opening balance. Now the management decision is that we have the SBI, we have the ICICI, then we have the HDFC. I have that. Then so we have these many bank accounts. But now the management is that their main intention is that whatever the balance which is lying, let me. So whatever the balance which is lying, all these bank accounts, these are all the, this is the top account, these are all the sub accounts. Sub accounts. So at the end of the day, what it has to be done, all these bank balance which are which the balance which is lying into this bank account, so it has to be transferred by end of the day, all this balance to be transferred into this account, into this SBI account. So this is the opening balance, right, into the top account. So meaning that if you go and see this balance, all automatically it will become zero by end of the day. So meaning that the 14 lakhs 22,633, these all accounts will become zero. This balance will be reflected here. 14 lakhs at 22,663. So what it will happen by seeing this one, the management will take a decision by end of the day. This is the right. So now end of the day, the balance will become zero here. Zero balance, but either it could be a zero balance or it could be some minimum balance to be maintained. That again, it's a decision we must have to discuss with the client. We need to do the configuration accordingly. Now, the main intention of the cash concentration here, all these bank accounts will be become zero by end of the day. The balance will be reflected into one top account. These are all the sub accounts. So either it could be there are n number of scenarios are there in the cash concentration, but I'm just explaining here overview. So by seeing this one, what will happen? The management will take a decision that whether these are the funds are going to sufficient to run the business operations for upcoming days, or do they require any additional funds, or if they do have excess funds, they can also take a decision, yes, how to invest those excess funds. Either they can go for the addition investments or they can go for the borrowings. That is the main objective of the cash concentration, meaning that all together the cash they can see into one bank account. Again, it's a depends on currency wise also you can do the cash concentration. Okay, for one of the client we did mapped around 600 plus bank accounts. Yes, we have successfully done that one. Now, for your information about the concept, what I was trying to explain here, cash concentration. Permanent average balances. So balances also, right, is what I have given the an example here, right? Until end of the day, those accounts are going to become zero. But even though we have a feature in SAP, If the bank balance, let's say now Citibank, if it is a less than 5,000 rupees, which is lying into this balance, this bank balance, the system, the cash concentration process should not be considered this bank account for transfer the funds. Yes, such kind of scenarios also we can able to build. The standard SAP system is going to support that. We can see that one. Okay, I can maybe during the configuration, I can show you where that need to be accommodated. But let us understand first what is the cash concentration. Hope you understood about the cash concentration, planning and decision. Still we are discussing here only.
Sir, I have one doubt, Vijay sir.
Yes,
Uh,
please.
if, yes, if in case sub account required, they have to maintain some minimum balance, will that main account transfer back to sub account? Are there
Exactly. Yes.
any?
Yes. Yes. That is there. That feasibility it is there. Okay. That feasibility as part of the cash concentration, we can do that one, Sanjeev. Okay.
Okay, sir.
Okay. Fine. Now moving to that payment made checks and bank transfers. So these are all the objective of all these things. The management wanted to know the cash position or liquidity position. Now, short-term cash management, liquidity trends, how the cash inflows, how the cash outflows are happening, and payment made through the checks, through the bank transfers. We must have to consider all this. By considering all the information, the planning and decision can be taken here. The moment when management arrives at this stage, then the next step is execute. Correspondence, bank orders, and the documents. Yes, invest or borrow the cash. So final outcome is that the planning is that if you go in this example, the example what I have given here, right? Based on this, if you do if you would have done planning yesterday, for example, 10th of August, what would be the situation here? The management or who is working, the treasury department has to arrange the funds in order to fulfill the 11th of August, or in order to run business operations on 11th of August. There is a deficit cash which is available 1 lakh rupees. These cash should be arranged by the treasury department. Okay, how they are going to arrange the cash? There are again, it's a depends on their needs. Either they can go for the banks, they can go for the internal loans, depends on their availability sources. But now, based on the all, by considering all this information, yes, the planning execution can be done. Based on the execution, if you would have noted that cash manager has been identified that if there is an excess cash which is lying into our bank accounts, yes, they can take a decision. The treasury department will take a decision how to utilize those funds. They can utilize those funds to expand the business operations, or else to go for the investments, or in case if there could be any deficit cash, they can go for the borrowings. Now, correspondence, bank orders, and documents. The moment when you take when we are into the situation, right, we must have to get the, in case we would have done the investment, then we must have the correspondences from the banks. I mean, if we did investment along with the banks, let's say we have done the fixed deposit with the bank for a 1 year of period. We must have to get the correspondence is nothing but a what is the amount we have invested with the bank and what is the rate of interest. Either that interest rate could be a fixed interest rate or floating interest rate. The terms and conditions, if we are going to partially withdraw, what would be the penalties and the charges? If you are going to break the contract within 1 year, what are the terms and conditions? That information consists of the correspondence, bank orders, and the respective documents to be taken. Now, finally, you could see that next day preparation by seeing all this or by considering all this information, yes, the next day preparation can be done. Payment advisors, print outputs, documentation. So the payment, if we are going to execute the payments, yes, you must have to take into consideration for next day preparation. Tomorrow, what would be the situation? As I have already given one of the example here, let us assume if this is the scenario, yes, the Treasury Department need to arrange the funds for future. Any questions on this one? The planning, how the process for day-to-day planning can be done. This is a regular activities, regular thing which is happening. But only thing just wanted to highlight here, the data here, which I did considered only the bank statement, electronic bank statement, and other information. Though the data which is arriving into the cash management, cash and liquidity management, various source of applications. It could be a finance, it could be a vendors, customers, treasury, from those applications. Yes, during the configuration, I can show you how we need to activate components, what are the applications to be required in order to fulfill your requirement. It could be a material management, the data, or it could be a sales and distribution, it could be a HR department. So the data arriving, the basic planning data arrives from the multiple source of applications for your information. But for automation process, yes, I took only that this EBS statements and manual, and also the manual planning I took here, for example. Just keep in mind the data will arrive from the multiple sources also. That during the configuration I can show you.
Can you
Right.
explain one
Moving.
more time money market, Vijay? Money market.
See, money market is an money market is one of the submodule in the treasury. The simple thing, let me explain. The money market can be used for a short-term investments or short-term borrowings. Now, let us assume the scenario. You would have done the investment. The organization has done the investment. Let's say under money market, the instruments are fixed term deposit, variable interest facilities. There are other 2, 3 instruments will come into picture. In that perspective, intercompany loans. So what will happen? We have identified that there is a excess cash with our bank accounts. So the excess cash has been already invested into the money market. So the money market, let's assume it could be a fixed term deposit. With one bank, we did the investment, our organization. Then what will happen? The expected interest, right? Interest mechanism, how often we are going to receive that interest. The interest could be a monthly or could be quarterly, could be yearly. So that is where that interest terms which are going to talk about here. But now if I go in detail, right, it will be too advanced now. Let us wait to complete cash management so that you guys can understand clearly what is the money market and how it is going to work. But high level point of view, right, either the investment or it's a borrowing point of view. Let's say now we would have borrowed in some loan from the bank. Yes, obviously we have to make interest payment bi-monthly. So that is the meaning of this one. Hope did I answer your question?
Yeah, go ahead.
Thank you. Now,
Sir, can you please explain next day preparation with one example?
this is already given, right? That explanation, Sanjeev, you could see here. This is one of the example which I have already given here, that example for next day preparation. See now, by 11th of today, you are doing planning for tomorrow's, I mean, see, let us assume 12th of August, you wanted to do the planning. Now, by considering all these things, this is the planning for tomorrow only. So by end of the day, 11th of August, you have identified that there is a 1 lakh rupees is a deficit cash. Then the treasury department need to arrange these funds. This is the example, Sanjeev.
Okay. Yeah, sir, got it. Okay.
Okay, no problem. Now, moving to the next slide here. Features of the cash position. The cash management tool is providing information on the current financial situation of the bank accounts. As I have already explained here, what is the bank balance and how the balance which is lying into the bank accounts here. You could see to then bank balance, that is amount transactions displayed according to the value date. Yes, in which date the transaction was happened. Yes, that information will be lying into the bank account. Liquidity status covering the next few days. Liquidity status meaning that either you can do the analysis based on the terms of payments, the invoices will become due. Either it could be a customer invoices, it could be a vendor invoices. According to that, the future days we need to consider based on the net due date. We have to think about either it could be incoming payment, it could be outgoing payment. Now, planned incoming and outgoing payments. Now, planned incoming and outgoing payments. If there are any planning which has been done for a future incomings and the outgoings, then payment advisors see now outgoing payments can be displayed and used for cash management decisions. One of the example I have given, right, just a while ago, I was talking about the GST payments. So now let us understand 30th of September 2026, we have to make payment. We have to make payment to government. We have to make a GST payment. Let me put it here is a GST payment to the government. Let us assume the amount here is a 15 lakhs rupees. So 15 lakhs rupees amount is not a small amount. It's a huge amount. But now planned incoming and outgoing. So meaning that here we must have to do the planning in advance for this payment. Let us assume we are not doing any planning. We reached the date 30th of September. We don't know whether this is one of the huge amount we have to clear or we have to make payment to government. Then 30th of September, we are realizing that the Treasury Department may realize that if they do not have sufficient funds on that particular day, what it will happen? Definitely there will be a penalties from the government. So meaning that it's the payables will not have any impact. It should run the regular operations should not impact, and also payable obligations should not impact because of the cash deficits. Now that is the point which is talking about this one. Sorry, plan incoming and outgoings can be displayed and used for the cash management decisions. So meaning that we can let us create one memo record manually. Yes, that memo record will be always populate in that report so that the management can take a decision. This is the amount which we have to clear on 30th of September. Now, the display structure can be defined flexibly using the groupings. Yes, we can do the grouping. It depends on our need. Then parallel management of the foreign currencies. Yes, the foreign currencies we can do the parallelly we can manage by seeing that balances. Okay, how much currency? Either it could be if we have a particular banks which are reporting for which are only reporting for here is a, let us assume USD you wanted to know. So those particular accounts can be considered for you for EUR. Yes, EUR have a set of accounts. Yes, you can also consider them. Now coming to that, okay. So as a result, the cash position of the value date based entry of all the payments within a short-term horizon and is based on the data from the three sources: FI postings, cash management relevant GL accounts. So meaning that these are all the FI postings which are related to your bank GL accounts. Now, manual and individual entry cash flow from the treasury operations. The cash positions, how the value date based on, basically value date when it will hit at the time of posting a document, you could see here if the based on the net due date, based on the baseline date, the value date will be populated in the document level. If you want, you can check that one. Then based on that, you need to think about that one. The system is going to do the planning by considering all this information. Now, source of the data for cash management. Now we are only talking about cash management. We are not talking about the liquidity management. We will talk about liquidity management also once the cash management will be completed. Again, please take note, cash management is a separate concept. Liquidity management is a separate concept. But now, together we can do the planning. Either you can go for cash management, only management wanted to know current balance, what is lying into the bank accounts. Yes, they can go for the only cash management planning. The management also wanted to know what would be the future incomings, what would be the future outgoings. Based on that, if by compiling all together, if management wanted to do the planning, yes, we must have to consider future incomings and outgoings also. Now, there are three sources for the cash management. One is FI postings, cash management relevant to the GL accounts. So you could see here cash management relevant to the GL accounts. The account type which we discussed in the previous sessions, the new account type has been introduced in S4HANA, cash account type. If the account type we are using, those accounts are dedicated only for the bank purpose only. You cannot utilize those accounts for any other operations. This we have seen that one. Yes, if you would have used that account, yes, those are all interconnected to your bank accounts. Memo records entered manually or automatically. So the memo records also, there is a concept called it as a memo record. Entire cash management is going to run and planning can be done with this information only. The memo records could be created automatically, could be created manually. But now our main is that yes, manual memo record you can create at any point of time. But automation is a very, very important one. For us, the main focus is the automation of the how the memo records are going to create automatically. Cash flows from the business transactions managed using the Fscm components. So cash flows from the business transactions, meaning that if there are any treasury operations, we just have seen about money market, right? So likewise, there are other submodules, money market, foreign exchange, securities, derivatives, trade finance. There are a number of modules which are available. We must have to take into account those some modules related transactions also for planning purpose. But the major here is that first thing is that the bank accounts, because those bank accounts only which are lying your cash position, which is illustrates about what is the cash position which your bank accounts are having. This is the 80 to 90% of the information you will get it from here only. Now, planning levels. The planning levels is used for the control purpose in a cash management. For example, the following levels could exist. How the planning can be done? if you remember the grouping, right? I was talking about, right? Here the parallel, see now, the display structure can be defined flexibly using groupings, meaning that you wanted to group together some are the items. How you can summarize those items? You could see here pure noted items in the cash position. But now whatever I have explained here, all the things may be required, may not be required. Based on my past experience only, I just prepared this information. Okay. For some clients, they can say that, hey, noted items does not required because noted items are the single line items. Why I need to consider? Because there will not have any impact in the finance, if you ask me. If they do not want to consider the noted items, yes, you can ignore this one. But still, if you still wanted to consider if there could be any uh, business requirement, we cannot avoid such things for your kind information. Okay, so that is the reason I was trying to explain all together in detail here. Now, coming back to that, pure noted items in the liquidity forecast. So now cash position, yes, you can also use the noted items for the liquidity forecast. In future, could be outgoing, could be incoming. Now, purchase orders, based on the purchase orders also where you can do the planning, and also orders. Notified incoming payments. FI payments, clearing incoming checks, outgoing checks, bills of exchange payments, and so on. FI bank transactions, FI bank transactions, bank statement positions, then checks, payments of bills of exchange, and so on. The user can define the planning levels as they wish. It's a depends on the business requirement. That is what I mentioned here, right? Now I want to group together. Let's say now all the blocked vendor line items. Usually what we can do, the moment when the order is getting created, when the finance document is getting created, based on the payment terms, there are few orders, I mean few documents we would like to block immediately for payment. So what will happen, right? Such things, if you want to group together, yes, you can define a separate planning level. Yes, you can group together such items. However, some naming conventions should be adhered here. So meaning that while defining the planning levels, you must have to follow certain guidelines. But now this is a just recommendation only. Either you can follow or you do not follow, or you can also follow your own way of defining the planning levels. There is no such rule. But if you follow with this, right, then the identification might be easy for the business users or management people. Now, to improve the display of cash position and the liquidity forecast, levels that start with F or B should be reserved for automatic update with the postings. The F level should be used for the bank accounts. So F level, see now what it will happen, right? F, the indication F, this is a prerequisite where it is a planning levels which we are going to define. F level should be used for the bank accounts, customers and vendors, and the B level should be used for the bank clearing accounts. So now F here, why they are talking about right here, it's a forecasting. We are going to forecasting for the vendors and customers. I mean for bank accounts. Now customers and vendors. B means bank levels for the bank clearing accounts. However you want. Now you could see when you display the cash position, it appears in a view of level F0 that there are postings amounts in the bank account, whereas the other levels reflects the planning flows of the bank accounts. In other words, postings on the bank clearing account are entered payment advice, as so on. As such, display for a plan actual comparison can be used. You should also reserve certain levels for the liquidity forecast for postings when payment block. The point which I have highlighted here. For example, all levels that start with X with the liquidity forecast, it apparent in view of blocked levels. That is a display for amounts are posting with payment block. So now this point, right, if I explain also, if we talk about more and more also, it may bit confusion here. From here to improve the display of the cash position, yes, during the configuration, I can show you how the planning levels can be done. But now what SAP has suggested right here, F and B, this might not be possible for us because we are multiple peoples are practicing here. It is a difficult for us to follow these instructions because one person, if I did configuration, I cannot instruct you to follow that one because you may have your own way of working. So that is the reason. Let us uh, see this one, how it is going to accommodate in the system. Now, moving to the next slide. Where are planning levels assigned in the system? We were talking about planning levels, but how the planning levels which are connected in the system, where the mapping can be done. Now, if I go to that, now if I go to this one, right? Here in the create bank interest data, now you could see here planning levels where you can map the planning levels. So please remember for GL accounts, the planning levels should be mapped for all the GL accounts. For customer and vendor case, yes, the planning groups can be configured. That we can see that one planning groups, how the planning groups can be configured. But now for GL account point of view, planning levels to be mapped here. That is what which I was trying to explain here in this slide. For GL accounts, the standard level is defined in the master records for company code specific data. So the configuration which is related to company code specific only. For customers and vendors, the standard levels is defined for the planning groups. So for customer vendors, the planning group can be defined. For GL accounts, the planning levels can be defined. Remember, okay, the planning group, right? I can also show you in the master data where this can be assigned. You remember, if you remember during the configuration, I did disabled that option. Either it could be a vendor or customer, FI customer. Let me take into this one. Company code data. Under this, you can able to see here. I pick this company. Now you could see this is what I was talking about, the planning group. Here, the required planning group can be associated into the customer master, customer and vendor master. Again, this how the planning can be done, either which is going to equal to your net due date or not. That again, the separate configuration would be required for that one. That we can see in the during our configuration that I'll fulfill there. Now, coming back to that. For the following applications or transactions, you can currently define alternative levels. So you can also, apart from GL, right, bank GLs and vendors and customers, you can also define your own planning. You can also do your planning. Blocked items, as I have already highlighted, special GL transactions, payment requests, purchase orders and purchase requisitions, loans, securities, money market, forex, derivatives, real estate, and the in case if there is any earmarked funds. You can also do the planning in addition to the above. The levels defined must be unique. This means you should not define the same level for more than one application. So meaning that the planning, right, the moment when we are grouping, let's say now I have defined the group E1. Let us understand. This is the, let's say now, planning group. Planning group. Let us assume the E1 which I have defined for, let us assume for domestic customers. So now, if the planning would have defined for domestic customers, you can able to see the domestic customers related balance here for planning purpose. Either it could be a incoming for tomorrow's point of view. Let's assume based on the payment terms, we can able to get this information. Now, E2. E2, let us assume for international customers. Yes, we can use only this planning group for, let us assume INR, let us assume here is a EUR. So now what will happen here? The planning group which is defined for your customers. Though you should not use the point here which is describing here, right? This point which is talking about the levels defined must be unique. This means you should not define the same level for the more than one application. Meaning that, let's say now you have defined these two planning groups for your customers in domestic and customers. Though you should not use the same planning groups for your vendor case. If you go and map this planning group for vendor master data, what it will happen, all the balances for that particular vendor also arrive and sitting into this balance. So the balance will be inconsistency. So now let us assume here, E2 also the same is been assigned for, let us assume vendors, domestic vendors. What it will happen, let us assume here is a, now you could see here the planning which we should supposed to done only for domestic customers, but by considering by default or by oversight, if we do the planning, if we do the mapping like this, right, the balance will be inconsistency. The actual balance for this customer could be only 12,40,000. Though the same planning group we have mapped here for domestic vendors also. This is the incoming, this is outgoing. Your planning could be inconsistent. It's not the accurate. So that is where the point which is talking about here. Same level. I mean, see now, this means you should not define same levels for the more than one application or transactions, as this is impairs the correctness of the cash position, the example which I have given, and are the liquidity forecast. In addition to this, navigating from these transactions to the correct application and the display of the line items no longer works properly. If you go in this way, as management can understand, or also management cannot take a decision strongly, yes, this is a data which is 100% correct. No, it will give the wrong impression. So it will give the planning cannot be done accurate. So then, see now we are just considered only the small amounts only. But imagine if the organizations, if MNCs how much amounts it is going to every day, how much incomings, how much payments, how many customer and vendor transactions which are happening in a day. We need to think about in that perspective. For our better understanding, I took this only that a small piece of amounts here that I can agree. But still, imagine if you go and see that if we display that vendor customer report, right? You can see the millions of rupees. So it will have, see now million means it's not a small amount. It will have impact, a huge impact in the planning. Now moving to the next slide, the planning groups. We just have seen until planning levels, how the planning levels can be done. Now the planning groups, how the planning groups can be done here. Cash management. In the cash management, customers and vendors are assigned to the planning groups. As I have already explained a while ago, customers and vendors associated the planning group here. Then assigned to the planning groups via an entry in the master record. You can define the planning groups as you like, customize however you want. You can define the planning groups. They must all be the same length through. So meaning that if you would have defined the planning group, two characters, two digits, yes, you can define two digits. If you want to go for 5 digits, maximum length, this is a 10 digits. Either you can go for the 2 digits or 10 digits, but it should be unique. Unique in the sense, right? For customers, you are following 2 digits planning group identification. For vendors, you are following the 10 digits group planning group identification. That will make confusion. So that is the reason even SAP is recommending that this information I have collected from SAP Pressbook. So now the planning groups are you likely customizing. They must all be the same length we discussed about for major customers and major vendors. It may make sense to enter the account number as the planning group in other improved display of the liquidity forecast. It makes sense to use as a naming convention for the planning groups in order to improve the liquidity forecast. So the naming convention, how SAP is suggesting that here in the flow, in the following examples, the planning groups of the customers start with R. What they're recommending here, right? If you go for the planning group for, see, this is for a customer case. For customers, you can define the planning with R. R is representing that revenues. That is what they are saying, that you could see here starts with R, revenues. And the planning group of the vendors starts with E. E stands for expenditure. But in the real-time environment, yes, this could be possible because in our client, we all multiple people. So I can say that previous batch people and we all together, we are going to practice in the same server. So it may not be possible to follow this approach, but the real-time environment, yes, I'm sure it can be possible. R for revenues, E for your expenses. Now, what is memo record? See, the planning groups we have seen about. Now, what is memo record? Memo records are information which will help you to make you investments, borrowings, decision purpose. So the memo records are temporary records. It doesn't have any impact on the finance. The first thing is that keep in mind, anyhow, during the configuration, I'll explain once again. Memo records are the temporary records. It doesn't have any financial impact for your information. You need memo records because this information is not available as the transaction in SAP. So the transactions, right? Yes, you have the transactions permanently. The documents, we have the financial documents. But now, though, we would require memo records for planning purpose as the transactions are not available in the, see now, this information is not available as transaction in SAP. What is the meaning of this one? Let's say today we have initiated payment to vendors. What will happen according to that? The file will be, the end users will run the payment program, the DMU file or whatever it may be, the file will be generated, the file will be sent to bank. But before the payment could be done by the bank by end of the day. We are not going to reconcile that. We cannot assume that whether the payment has gone out from the bank account or not yet done. In that perspective, right, we must receive one more statement, one more EBS statement from the bank, that is a current day statement. With the current day statement, we can do the planning before making the payment. Right? Actually, the transaction, when we do the reconcile that payment initiation, tomorrow morning only we will get the statement from the bank. Then only we can able to understand whether that payment has been carried to the vendor's account or not. That tomorrow only we will come to know. But until then, we do not want to wait. The actual transaction which is not with us now, though you must have to utilize that one and create a memo record for your planning purpose. Yes, you can do that one. That is what the meaning of this one. For example, you can use a SAP as your ERP, but the payroll is done in the some other system. Let us assume the business scenario what I have described here. Let us assume you know the Workday. Workday is one of the tool that is also one of the ERP software application, I can say. The payments which are happening in the Workday application. Now, the originally here SAP will be used only when the payments which are happening through the Workday. But when the same information to be, we need to bring into the SAP system for planning purpose. SAP will be updated only after the actual payroll file from the other system, meaning that let's say Workday system, once the payment will be happened, once that Workday system file will be uploaded into our SAP system. This will normally happens only after the actual payments. But before that, you need to information in your cash position. Without knowing that the Workday is the some other application, some other team is handling that one. That's a HR team is handling. But they are ready to initiate payments, or they have already initiated payments. But before that, we wanted to know the cash position, whether we do have sufficient funds into our bank accounts or not. That is the major concern here. So how you can do the planning for that one, and a liquidity forecast report. So FF7AN, FF7BN, in order to have this information, you can enter the payroll amount as a memo record. So meaning that you no need to wait until to run the payroll, and no need to wait until to, let us plan for the August month salaries. No need to wait until end until to run the payroll. If you are going to wait until last day, then what will happen, right? We may not have sufficient funds till the time. Again, it will create a lot of complication. So that could be the reason. Let us create one memo record now itself. Then we can do the planning. We can go for a better planning and better output. So that is what the memo records can be used. This is the manual memo record which I'm talking about. Yes, automation also it is there, that we will see anyhow. Memo record do not update your GL account. First thing is that until and unless if there is any update in the GL account, yes, you need to think about there is a financial impact. As I have already highlighted, there is no financial impact the moment when the getting created. Either it could be a manual memo record or it could be a auto memo record. These are just information and they expire as soon as the transaction is entered in SAP. So meaning that there is each memo record has a validity period. Once the validity period will be crossed or will be ending, definitely the memo record will be, the status will be automatically moved into the inactive state from the active state to inactive state. That is the auto mechanism in the system that we can see that one. Now, cash and liquidity management process flow. How the process flow, this process flow is very, very important one here. How the process flow can be done here. So now if you can see here the end-to-end process flow, if we talk about, yes, during the right during the configuration, yes, I can also describe or I can also explain more about the process end-to-end process. First, let us, this is a high level process only. Yes, during the configuration and explanation, I can give more accurate the cash and liquidity management process end-to-end flow. First, this is just high level source database here, data flow from the GL accounts, BKPF, BSIG, and here you could see here, and the data flow from the MM, okay, and the tables which I have described here. Then here data flow from the SD, sales and distribution, VBRK, VBRL, and other tables. Then what it will happen, right? First thing is that the data will be operational transactions from the various sources, instance, various database tables or various transactions. Then once it could be a customer vendor, a customer invoice or vendor invoice, or it's a FI transactions. Then the cash flow information will be, see now, build the cash flow from operations to one exposure through its a nature of transactions, flows, flow types, schedule. It's a background jobs. Yes, there are background jobs which need to be bring the data into cash management from the other applications, from the other components here. Once the data will be moved into, I mean, consolidated, the jobs will be pulled. Okay, depends on your requirement. Then the jobs will be pulled the data and it will be lying into the one exposure, meaning that the one exposure is a one FQM underscore flow is the only one universal table. This table is designed only for the cash and liquidity management. For your information, the one exposure table is a temporary table. If you do not want to the, I mean, unwanted transactions data, yes, you can also remove from the table, but it doesn't have any impact. Okay, we will see that one during the configuration. But one exposure FQM underscore flow is the table. It is a kind of temporary table only, but still if the data which is lying in the one exposure, then we can able to see the information. The same information will be followed by or will be reflected into your cash position or else the liquidity forecast. Based on that, the management can take a decisions. But we'll see that in detailed process during the configuration. Again, I'll give more and more in detail. See now, source application data, various components. Now the target would be a cash management table. Cash management integration with other modules. So does it cash management is going to integrate with other modules or not? This is a lot of queries. This is also one of the interview question. You must have to face this question during the interview. If you see closely here, it is going to integrate with the finance and the bank accounting and also treasury and risk management, consumer and the mortgage loans, contract accounts receivable and payables, FICA, sales and distribution, material management, EBS statement integration. This is the crucial part for us because we could see that manual, I can create one memo record. Yes, in a different way also, I can train you guys. But still, right, that is not accurate. Majority of the organizations, if they wanted to go for the automation for the cash management, cash management especially, the integration can be happen with the electronic bank statement. This is for us is very, very important one in the sessions also. Now, prior day electronic bank statement. During the discussion also, I have explained, I have highlighted, there is a difference between prior day statement and first thing is that electronic bank statements are two types. One is a prior day statement, another one is a current day statement. So now if we talk about prior day statement, where it consists of, let's say now the transactions which are happened yesterday. Now for those transactions, the bank will send EBS statements to SAP next day. That is the meaning of prior day. So with that, yes, there could be accounting documents will get posted. Clearings might happen. Yesterday, what we have seen, right? Until yesterday, we have cleared couple of vendor line items and customer line items also. Okay, how it was done. Now coming to that, to post to account with help of the prior day statement to post the accounting documents and clear the subledger items. Current day statement, now intraday statement, electronic bank statement only for memo records creation and the planning purpose. The current day memo records can be used only for planning purpose. It doesn't have any impact on the finance. Please take note. Now, okay, so this is the last slide which I have explained here. We have seen about overview of the cash and the liquidity management and what is the purpose of that one. Okay, let us see. Before getting to that, in the upcoming session, right? In the upcoming session, before getting to the cash and liquidity management, let's say now Venu here, he wanted to be part of tomorrow in the implementation project. Let us assume. But which OSS needs to be referred? Before getting to that, right? So we must have to see the OSS note. What is the OSS note? We need to see in case if there are any changes or in case if there are any new programs which are added in that, we must have to validate, we must have to check that OSS note accordingly, then we need to go for that one. So that OSS information, I will let you know in the tomorrow session. I have a separate PPT that is based on the implementation project only, that I'll get it. It is with me only now itself, but now we have only less time. I cannot show now. Then after that, what is the application to be activated in the major thing, what we are going to discuss in the tomorrow session, right? Then OSS note and that the difference between basic scope and full scope of the cash management. If you go for the full scope of cash management, then how and what are the additional things you would require? And also, in addition to that, what is the difference between main full scope and basic scope we can discuss, and also what would be the license, how you need to obtain, and what is the application you need to activate for the cash management in order to utilize that functionality, right? There is a separate function, business function, which we must have to activate that one. Then only the cash and the liquidity management functionality, it is going to work. Otherwise, right, that function will not work. That we can say end to end. So by seeing this, all this, right, we talked about many times about the bank accounts. So electronic bank statement especially. What we did until yesterday, we have done the prerequisites before getting to the main topics. Until yesterday, we have seen about. Okay, so tomorrow onwards, I'm going to start basic, it's a configuration from the beginning of the cash management, from the application component OSS node. Then after that, we can see the further steps. Any question on this? If any question, so please let me know.
Vijay sir, regarding memory cards, is this only for expenses or
It is
for
not
even we can
it is not only for expenses, it is for your revenues and expenses, whatever you want, you can do the planning. Okay.
Okay,
But
it means,
just
for example, another next 30 days, we may expect incoming payments from customers. That also we can record.
you can do that one. You can do that one.
Okay, okay, sir. Thank you.
Yeah, thank you. But just wait for some time so that you guys can come to know what exactly needs to be done. But this is right. We are just discussing high level, but still I would recommend here just wait for a few days. Definitely you will come to know that what is the I mean memory card and how that can be work. Okay, how it is going to reflect into our reporting point of view. We can see that one. Okay, fine. If there are no further